Welcome back, everyone, to Vox Markets. My name is Paul Hill. I'm delighted again to be able to speak to CEO Bob Rauker and CFO Tony Dyer of Belluscura, a next-generation medical devices firm specializing in portable oxygen concentrators that are used to treat patients with acute respiratory conditions. So welcome, gents.
Good to see you, Paul.
Hi, how are you? Nice to see you again.
Well, a lot's been happening over the last few months, not least today's positive first half results. But before we dig into the details, Bob, I don't suppose you could quickly give us a sort of like a flavour of what the demand picture's like for the company's products.
Well, as you also, we had 2 RNSs today, of course, with the interims, and then we signed a major purchase agreement also on Friday. Very exciting. That's we believe transformative to the company. It is a leading provider of supplemental oxygen in the United States, and more information will flow from that over the next few weeks. But they were very excited about the product that we are putting out this week, the Explore Next Generation, and of course the Next Generation Discover we'll talk about a little bit later. So very exciting, lots of stuff happening.
Good. And basically the underlying demand, Bob, is pretty strong for your device. I did see the chairman coming up and say, he said in the statement that it was very positive.
It's very, yeah, the demand is great. And that's, as we get in more detail, we'll talk about why we move manufacturing and things like that. But we had to do that just because the demand has been far exceeding our expectations. So, which is a good thing. But we've been responding to it. So very exciting, very positive response from consumers, distributors, and et cetera.
Yeah, well, good quality problems to have. Now, Tony, just in terms of the first half results, obviously it's still early days, etc. Do you want to quickly give us sort of take us through the highlights of the numbers?
Yeah, sure. So obviously we launched the first product in September last year. We continued to grow sales in H1. Record sales in H1 of 0.6 million, up 34% on H2 last year. And we continue to manage the business very tightly as we are scaling up. So losses in the first half were as expected, and we had $11.3 million of net cash at the end of the year. But I think the key messages we're getting into this is what we've done strategically to set the foundations to scale the business significantly. The signing of a global transformational a global manufacturing agreement with Innomax in China to manufacture our product there, successful transfer of US manufacturing in-house, the completion of ISO audits for 13485 quality standard, the launch of the next generation Explore product, as Bob's just mentioned, and as he's also mentioned, significant distribution agreements signed. So that's really the key messages in there. We're setting this business up and very excited about the future.
Yeah, no, it does certainly seem as though you've got you've got your production and your supply chain now fully sorted. Do you want to quickly shed a bit of light on that one, Bob? Because I mean, just looking from an investor in, it seems though since you've launched at the start of sort of September, 12 months ago, etc., you sort of like you sold, well, I think you reported 377 last year, etc. So and you didn't have much inventory at the end of the year, so you sold everything you could actually produce. And then it seems as though you've had some sort of, supply difficulties in the first half with your contract manufacturer. And
so, yeah, sorry. Go ahead, finish your question.
Yes, so you finish with the contract sort of manufacturer, which might have sort of disrupted some supply, and then you've had to transfer production into your own facility, and likewise finish off some sort of like ISO orders in Q3. Do you want to just quickly sort of shed a bit of light on that sort of like supply sort of like picture through the relative quarters of really since you've launched?
So I think so we were in a very good position last year. We had a good inventory, and a contract manufacturer was making units, and we were selling them as fast as we were making them. Rolling into earlier this year, as we continued, the demand continued to grow, we started finding that the contract manufacturer, and in fairness to them, we were literally doubling our forecasts on them, and they just couldn't keep up with both on their supply chain side and on the manufacturing side. And a side note, it's sometimes, especially in the UK, it may not be as obvious. In the US, large portions of the U.S. still have unemployment below 3%. So you're trying to get supply, you're trying to get people. And we made the strategic decision. Fortunately, we have people who have years of experience in the oxygen enrichment manufacturing, and our chief of operations used to run a 100,000 unit facility. He's the one helping set up, driving the setup in China and in the US. So we made the strategic decision to move manufacturing to Texas from our contract manufacturing. And like everything in the medical device industry, it takes a little bit of time because you have to revalidate and recertify everything. We took advantage at that time too to get our ISO certification 1345, both in the US and with our Intermax facility in China. And that opens up a huge amount of opportunity because we're FDA cleared in the US, of course, the US market, but we would need ISO certification. So we ended up expediting that. That was not planned until later this fall, but we said, if we're transferring manufacturing, let's get it certified now. So that shut us down for a little while as far as we brought material in, inventoried, and finished out the completion of this. We did ramp up very quickly in July just so that we could build. And we built 300 units within 3 weeks. So showing that the new production can be scaled very quickly. At the same time, we expedited China Intermax, and that's actually going to come online probably a quarter faster than we thought. We didn't think that would be available till late Q1. Now it's looking early Q1, possibly sooner. So that'll bring more product into the pipeline. And part of the other thing too, bringing it in is many of the big distributors and stuff, they want to make sure we have a large enough inventory on hand to supply them. They don't want to just buy 100 and then say, they got to wait 6 months for 100 more and stuff like that. So that's all part of the strategic move, as Tony said. So we moved into that hopefully we'll get the ISO certifications. The audits were completed favorably. We just signed that contract with the leading distributor. And so everything is pushing along. We have quite a bit of inventory to move forward now. I can't think of anything else off the top of my head. That's
so just in the US facility, what's your run rate? Is it we're talking like 100 units production a week? Is it? So you're looking at in Q4 you can manufacture, I don't know, 1,500 or so.
The goal for the year end is that we're going to try to shoot 3,000 units by through the end. So 3,000 to 4,000. Tony, correct me if I'm wrong. I'm not.
That's correct. Yeah.
Yes. So that's where we should. And we have a much better. We have double the size of people that we had from July when we did 300 in 3 weeks. So we keep building up that, and we're hiring good, strong, skilled labor that has good experience in the medical device. Our quality has been outstanding, and the reception. We've been to a number of trade shows recently. And very, very positively reception on the new next gen Explorer. So they're building a good product. They're building it faster. The supply chain is strong, and that's in combination also with what's going on in China too. Is they continue to build up their inventory of product for later distribution, either the end of this year or beginning of Q1.
And then at the beginning of Q1, or once China gets sort of fully up and operational, what sort of like throughput do those guys have? I mean, they're serious sort of like third-party manufacturers, aren't they?
Oh, yes, they're very serious. I mean, the forecast, Tony, 18,000 units is kind of the target for next year. That'll be a larger portion will be coming out of China. How we balance it, because we will have a second product coming online, the Discover. So that will be manufactured in the U.S. initially, and then we'll see as far as flow rates. We may shift some of this production more to China, which has a large capacity. And then as we roll out and get registration in the various Asia-Pacific countries, and we'll also be doing the CE and the UK marks and stuff like that. So we'll be moving production around wherever we have registrations, because we get calls constantly or emails from the Middle East to South America looking for units, and including the U.S. too, of course, and the UK and Europe and stuff. So the demand's there. With the new change in strategy and production, we should be able to meet demand through 2023 there and into 2024.
And it's reduced your unit costs, doesn't it, as well, Bob?
Significantly. It's definitely by, when you have a contract manufacturer, of course, you're paying for the cost plus their profit margin. Of course, we brought it in, and quite frankly, we're actually able to pay our workers more money, but also we able to reduce our costs significantly and more. They just work better, faster, and stuff like that. So I think it's close to 10-15%. Reduction in COGS.
It also allows us to manage the inventory better. There's less scrap. We can actually maneuver better if we find things aren't quite working and we've got too much scrap. We can obviously make those changes quickly.
Yeah. Well, certainly reducing the cost must be sort of like good music to your ears there, Tony.
Absolutely.
In terms of the actual input cost inflation, what are you seeing there in terms of I know some of your competitors are still struggling with chip availability and stuff, but you guys sort of like astutely bought ahead, didn't you?
Yeah, I think the key thing for us is obviously our volumes at the moment aren't anywhere near like the big players. So we're still able to source materials. The lead times are coming down, but they're still quite long in some areas, like chips, for example. And obviously, as we start to increase our quantities, we will start seeing that average price come down as well.
Good. And I was going to say, in combination with that, by partnering with such a large OUS, the Chinese manufacturer, they have significant advantages on their own supply chain capabilities, and that's already paid off significantly with us on acquiring certain components at literally a third less than what we can source material at. So we get that buyer advantage of a large contract manufacturer, and that's already shown through on our plastics and our resins and stuff like that.
Good. And then, Tony, in terms of sort of like the cash flow, in sourcing the manufacturer, will that have any impact on sort of working capital levels? Because obviously you've probably sold quite a lot of you assembled the product in July and then must have probably reduced your inventory in that month. But likewise, whilst you've been doing through the ISO audits, a bit of disruption, that's probably, sort of like led to an increase again. But when we get to that steady state and you've got more sort of like effectively doing all your own production, what does that mean?
I mean, what's happened is when we transferred the manufacturing, we had quite a lot of raw materials come across from the contract manufacturer. So effectively on the balance, it's obviously gone from cash into inventory. But as we grow, obviously we need to keep that inventory coming in. So there will be working capital requirements going forward. But we've got enough, as Bob said, to manufacture, 3,500-4,000 units easily, and that will take us through into probably we've got other raw materials which will take us well into next year as well. Good.
Okay, excellent. And then, Bob, just on the sort of new product then roadmap, etc. You've got the Discover coming out next year, etc. You were saying, which is, can you just give us a quick highlights of that product and what we can look forward to as an investor?
So, and this is, we're so excited. We've actually, this is an Explorer over here, and we didn't really talk about it, but we talked about it briefly, I think, the last time. But the Explorer, the next generation Explorer comes out, but it also comes out with the Nomad app, which ties into pulse oximeters and smartwatches, and this is actually a Fitbit in your phone, and all that data comes in to your unit, and you can share that with your doctor. Nobody else is doing that in the industry. We're getting a lot of calls from respiratory therapists and pulmonologists, very interested in that, and in fact, wanting to collaborate even and work with things. This is the Discover. This is a production. This is we're testing these right now with people. This is what's going through what's called the pre-market evaluation, and with a scheduled launch in Q1. And this has For example, the company that we just signed the distribution agreement, very excited about this. And to put it in perspective, the Discover will be the world's first ambulatory, which is less than 10 pounds, unit that does both pulse and continuous flow, which basically opens us up to another, I don't even know how much more, but it basically opens up 500 million or so more into the stationary markets because it has continuous flow. To put it in perspective, it will do 2,000 milliliters of continuous flow and pulse. To give you an idea, these are competitive units. I've covered them up, but you can see in sync, they're about, our unit's about a half a pound heavier, twice the amount of oxygen. It's plain and simple. And so when you're a consumer and you're worried about oxygen, this is another leading brand out there. And what's on the market right now that does the same amount of flow is this big unit. So we think that, you know, when you're talking, you know, 6.5 pounds versus is 5 3/4, you know, versus 12 pounds. I mean, this is transformational to the business and the consumers. And we already have a running list of people that are calling to order this. We don't even advertise it yet, but just on people seeing some investor shows and other stuff, they're placing orders. So that gives you an idea already how excited people are about this product. So, and that'll also have the Nomad app on it also. And so that's just, we really see it as a transformational, and by setting up our own production here, that's the other thing too. It's going to allow us to get out quicker as opposed to trying to train a contract manufacturer on how to build. We're building it. These units were built here, and then, you know, I'm pointing over here, but it's across the hall here in the manufacturing area. But that's what's really got us excited, that we have control over it. We have the supply chain control, and that's why we feel real comfortable. But those will be rolling out very shortly in Q1.
Well, I'm not surprised patients are pretty excited. If you can get sort of twice the output for a lower weight, then it certainly sells on its own. But in terms of sort of export or not exporting, sort of selling into the EU and into sort of like Asia Pacific, etc., does the ISO sort of like clearance allow that to happen sooner then? Because you
Absolutely, yeah. So that was one of the reasons we paused to do the ISO audit and to allow us to get them into it. The authorized inspectors and stuff came in and did their audit and said it looked great, or looked good, I should say, whatever language they use. But that in order to get into China, the EU and UK, we needed to have that ISO certification. So. And we did this all in a very compacted time. So we were actually very excited that we managed to do managed to transfer the product to here, get everything in place, and then get the ISO certification all in basically less than 3 months. But it basically doubled the size of our market because now it's not just the US, but now we can move into the registrations in the UK, in Europe, in China, and other parts of the world where there's high demand on oxygen concentrators. So yes, it's a big deal for us, and it allows us to speed up. We're told anywhere from 6 to 9 months it'll take to get a large chunk of those registrations. Some countries a lot more, but for the key ones, it's going to be somewhere in that 9-month range from whenever we finally get the certificate, which is supposed to be coming any week now. So that'll allow us to start that process. We're already setting up the paperwork to move ahead. We just have to wait for that final check in the box and stuff. So that'll be another big, and then we're already working with talking to various distributors and registration type groups throughout Asia Pacific and in Europe too.
So Tony, when you're putting all that together, when you look at sort of like further out, then we're looking at sort of like, sort of hope, sort of 18,000 units for next year, between 2 to 4 for this year. But if you then wrap in another market, Asia and Europe, which is twice the size of the US, into 2024, you must be sort of like pretty confident and sort of like, looking for a big step up again the following year, not just next year, but in 2024 as well.
Yeah, I mean, we're very confident about the future. We've got the manufacturing in place in the US. We've got the Innomax China manufacturing, which they can scale significantly, and obviously opening up that market opportunity with a quality product is very exciting. So we're very confident about that.
Great. Okay. Well, just finishing then, Bob, can you just news flow for the rest of the year? Presumably you'll have a trading update in January, or is there any have you got any more deals? You've been sort of like really busy for the first sort of like 6 to 9 months. You've kept a really sort of quite a fast pace.
Oh, there'll be some more additional things. We're doing some next generation things on the Nomad app with we have some partners. Obviously, we'll be releasing more updated. We're constantly doing things, and I think that we're planning on, as we ramp up production, we will be signing more distribution agreements. We do have other people communicating with us, but we're trying to make sure we don't, oversell what we can do, and so that'll be kind of the news flow as we continue going ahead. I should say the other thing too is one of the things is we'll have our first nationwide television commercials hitting the market next week on selected networks that focus on where patients tend to watch TV. So that's an exciting thing because we're trying to make it a household name. And,
are you in front of the camera there, Bob?
No. They don't. No, they don't have a. That's bad enough. I'm here, but. No, we have some nice commercials coming out that have been well received, as we've talked before. This company is all about, we price these products very competitively, quite frankly, less than anything available out there. We think that's, the worldwide people are facing a lot of inflation. We're putting the pressure on us to get the price down. And we're working with our distributors, and they're working with us too. They want to get the product out there. They want to get it to their patients, and it's a win-win situation for everybody, and also for the system, the healthcare system too. We'll make it up in volume, and we feel good about that. It's a good product. And so that's part of the whole thing is we have a new partnership program that's been well received by a number of distributors, and the patients are excited about a product that's 5, 10, 15% less expensive than the competition. And so there's just a whole lot of things going on, and that's being well received in the market.
Great. Okay. Well, thanks very much, Jen. Just before we finish, I'd just like to highlight to investors. I mean, I think the shares are a bit sort of a baby in the bathwater. They've been sold off, but they're about 80p at the moment. But Dowgate have a target price of around about 200p, and so there's significant upside in terms of the actual stock. In fact, I'd say the device you're selling is a bargain, but the shares are even better value. So I'll seriously say investors haven't put the slider all over those. And anyway, thanks very much, gents, for your time, and looking forward to touching base over the coming months.
Thank you.
Thanks, Paul.